Good morning and welcome everyone to the Schwab YouTube coaching channel. It's the Wednesday edition of Trader Talk in today's market, and I'm your host Kevin Horner, joining you from a downtown Chicago Schwab studios. Today, pleased to be joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. How you doing today?
Hey, doing good. I'm glad you're in Chicago. So let's see, on X you have a post of a game you went to last night. Is that correct?
That is correct. Had a great evening to myself. A solo evening at the ballpark is not a bad thing, believe it
No,
or
it's
not,
not.
especially at a place like Wrigley. I might have had too many Italian beefs and sausages, but it was absolutely a fantastic, lovely evening. Weather was great and enjoyed myself immensely. So, hey, this today is an FOMC decision day,
Yeah.
Brent, but it's probable that we're not going to get a whole lot of market moving commentary necessarily out of the Fed today.
That's true, but interesting nonetheless because it's going to be Kevin Warsh's first press conference here today on this. So as the new Fed chair, and so that'll be interesting to see. Well, we can talk about that in just a little bit. How about it, Kevin? I know we need to
Yeah.
hit up some disclosures here, and then move to the main subject here.
Exactly that. Thank you, Brent. So let's say hey to Barb there in the chat. Barb Armstrong, fellow coach, will be managing chat for us today. Brent and I will keep an eye on things to bring your commentary where we can into our discussion, but Barb will get to comments and questions we're unable to. Make sure you're following the three of us on X, as Brent called out. Brent Moore, CS, Kevin Horner, CS, and Barb Armstrong, CS. A great spot to find us when we're not on the YouTube coaching channel here with all of you. And with that, let us jump to those disclosures so that we can move to the charts. First of all, remember that everything we cover today should be considered informational and educational only. We do not make recommendations. We do not endorse any specific approach to trading the market. We will discuss and utilize technical analysis as we review the various charts today, but technical analysis, while helpful, should not be considered the sole means of your research. We encourage you to maybe think of it as one of your decision-making puzzle pieces, just not the entirety of it. The technical analysis concepts and strategies we bring to the table are some that traders may choose to employ. If you're looking to do so in your process, make sure you're doing your own due diligence on those. Now, what we do here in this class in particular, we follow this top-down agenda where we'll start broadly with our indices, S&P 500, NASDAQ 100, Russell 2000, semiconductors. We get into the sectors on the move today, see if we can learn anything from the sector charts, and then into some stocks in the news. Now, upgrades and downgrades might be a little light today, but we do have some individual equities that received a bunch of price target adjustments, which may very well be notable. So we'll look at a few of those in that space as well. All right, so with that, we'll start us off with the big boys, the S&P 500 here, Brent. So interesting action yesterday, wasn't it? I mean, we tried to continue the market move to the upside we'd seen on Monday, and yesterday just felt like we were maybe breathing a little bit.
Yeah, I would agree with that, Kevin. Obviously we had the news over the weekend with the Iran U.S. conflict, and the market reacted expectedly, I guess, in that regard. But that was the big news, and at this point we're kind of wait and see. And to be very honest, I would have expected a bigger upward move if the market hadn't already been high enough. In other words, during this Iran-U.S. conflict, look at what the S&P 500 has done. It's just gone up. So like if the market was crashing during the conflict, and then all of a sudden we have this news of resolution,
Yep.
potential resolution, I guess I should say, then I would have expected a bigger move up. But, really the market wasn't that depressed at this point, it seems like. So we got kind of a mini bump. But at this point, it seems like it's deciding where to go. We recovered that 20-day, but, we'll see if that holds. And we'll see what the next news is that moves the market. But the 20 days significant. Maybe the kind of the high that we had back, maybe a month ago there. Yeah, that.
Yep.
That's a potential, kind of support area. Adds a little bit to the support area in addition to your diagonal trend line. Yeah.
Yeah, so a couple of things here. One, I drew the trend line more to highlight the move, Brent. Essentially, what we're seeing is an S&P that is 9% higher than we were at the start of the conflict. So clearly, the conflict is not the concern that it was built in to be. Sure, we got some weakness, but the fact is 9% above where we were pre-conflict is the shock to me. What about you?
That's not, yeah, that's not a bear market by any means
No.
there. And so, yeah, so it's not surprising that we're not moving up much. And this kind of goes to the point that the market is forward looking. All along, when we've talked about, hey, the market's not selling off in this conflict. Why is that? Well, the reason is, the expectation is that it was going to be resolved at some point. Obviously at some point, but in months rather than years or something like that. And the same thing, we're not going to go to oil right now, but when we get to oil, why did oil not go up and stay above 100 for a while? Well, the reason why was people expected some sort of resolution all along, even if that wasn't going to occur in just a couple weeks or anything like that. People figured by the end of the summer, we'd start to see some sort of resolution, which is why prices didn't go up as much as they did, and which is why the SPX actually did as well as it did.
Yeah, and Brent, I think that there's another story that comes with that, and that is the incredible improvement and increase to earnings expectations on the forward-looking basis. We continue to see the S&P manage itself higher in the face of negative commentary, right? Narrative commentary, I should say. And so when you see all of these negatives overhanging the market, what it absolutely does is it keeps retailers on the defensive, and retail traders, that is, on the defensive, uncomfortable, unsure, and it may keep them, from participating in this market. And I need to reiterate the importance of the trend. The consistency we're seeing in the S&P since recapturing the 20-day has to be notable, but the 50-day down below us at 72.85, now 7,300 with today's move here, we've bumped that up, could easily be supportive as well. So we're looking at not a short-term trend any longer, more of an intermediate-term trend maintaining, and clearly the focus is far less on things like inflation, right, and much more focused on earnings expectations, it would seem.
Well, that's the only explanation, I think, that the market has done as well as it did, because look, news with inflation hasn't been great as we've looked at that. And if that were the only thing dictating the market, we probably wouldn't see a market as strong as we would. And how do you beat inflation? Well, I don't know if you beat inflation this way, but we're in really bad shape if earnings are poor and inflation is poor. That would be more of a stagflationary signal. Whereas, it's not ideal that our inflation numbers are high, but it's more acceptable, I guess, as earnings continue to go up.
Yeah, like we can manage it, right? We are clearly taking the negative of inflation on the chin and saying, okay, we recognize it, we see it, and then reminding ourselves that we are a forward-looking animal, that market that is, and clearly the expectation is for inflation to mitigate a little bit, right, and maybe decrease. And the truth of the matter, we're going to look at oil as you called out as we move into the NDX here, but the truth is, in all likelihood, it's the decrease in oil is going to be a major impact on inflation data over the coming 3 and 6 months, I would think, because that data previous has shown that we've had obviously increases to inflation, right? It's been running hot, which is not a shock. I mean, we all live in the economic world day to day, but the reminder is that this market's already 6 to 9 months in advance of where we are today when I go outside and head to the store, right? So expectations for decreasing inflation are apt to keep the market relatively on trend would be the expectation I think traders are monitoring here. Now, Brent, as we move to the NDX, one of the key takeaways for me, in addition to what we see in the SPX, is that today is day 3 back above the 20-day. Could we see that traders are now possibly, as we move past today's FOMC decision, which we maybe expect to be a non-decision after all, but if we have 3 days in a row of holding the 20-day, we might be looking for some traders at confirmation of trend resumption.
Yeah, I mean, you could almost view it as kind of a flag-ish situation.
Yeah.
So the flagpole in this case would include a big gap in it there, and then a little bit of a pullback or a little consolidation, and then so the expectation there, no guarantee, the expectation is as we break out the upside, then we could have a sharper move up there. Now, sometimes things reverse and this could certainly turn into kind of a double top situation if we wanted to, but
sure.
But that's what the flag pattern would look like, with some support, with some an extra indication by having that 20-day, which is a fairly typical moving average that we use often here, that we may be bouncing off of. If those two kind of things together would give us that kind of price pattern.
So, as always, Brent, the reason we draw these in, is because we want to extrapolate what may happen. We don't know. But what you said is entirely true. Could we break to the upside if the flag is the key trend scenario here? We could. If we moved through new highs, then the expectation might be the push up to 32,140 as an example, from a possible target for a measured move. Now, measured moves are never guarantees to be achieved. They're just ways that we traders try to set target zones and expectations. But as you called out, Brent, if we don't have those drawn in, well, then maybe the key factor is that we've not made a higher high just yet. We've made a lower high, which RSI is validating to this point, right? Because we got into overbought conditions pretty clearly for a while there, and we're not seeing the RSI expediently move here. Now, it will follow price, so what happens today matters. Of course, what happens tomorrow, our final trading day of the week, matters. But we're monitoring for all scenarios that could play out, Brent. That's the job of a trader, right? Think about the multiple opportunities we could be seeing.
Right, and the prevailing trend has been more bullish, but hey, look, we could break below the 20. Where's our support level? Well, you got the 50-day moving average out there sticking, which is kind of right in alignment with where our lows were about a week or so ago, too. So, I don't know, but tech especially, and this is NASDAQ we're talking, so we're talking tech here. It certainly can be more volatile, and it's been fairly strong, and when it goes down, it can go down faster. We saw that with chip stocks yesterday, a big sell-off, and well, that's reflected in the NASDAQ chart as well.
Yeah, for sure. All right, Brent, let's look at those small caps, huh? Up almost 1% today. We talked about the bull flag. Kind of looking similar here, isn't it?
Yes, it is. Exactly. So that's what we're seeing. Support level, kind of where you're pointing there, bounce. And when you're talking about flags, context matters. In other words, if we're preceded by an upward trend, which we had higher highs, higher lows, then it's generally more of a bullish forecast on that. Whereas if we are in a series of downward trend, then we're looking more for bear flags. But in this case, we've had higher lows, and expectation, I think, for a lot of technical traders would be for another higher low. We'll see if that actually comes about. Yes,
we will. Now, of course, what's the key detail as we think about small caps, we talk about yields, right? Yep. So let's see what yields are doing. Now they're up a little bit here, but ultimately have come down quite nicely from that aggressive spike we had to the upside. Everybody who's here frequently remembers me mentioning resistance at that's gap zone here. We've used it as resistance. We've pulled back to support. Now what we're looking for is a potential break of this uptrend in yields. A break of this uptrend below the 50-period moving average here, Brent, would be a fairly significant move in yields lower. If that were to occur, would you anticipate the Russell getting further legs here to the upside?
Well, it should only help the Russell. There's multiple factors, and sometimes we've seen them go opposite. I guess the same direction, or in other words, when rates go up, which presumably should hurt the Russell 2000, we've seen at times the Russell still go up, but in general, we'd expect lowering of yields to help small caps. Mm-hmm. Now, one thing with yields is one big factor as to what yields are is kind of inflation expectations. Something you brought up earlier was how oil prices can affect inflation expectations. As oil goes lower, that would tend to put less pressure on rising yields. And so, if anything, assuming, oil prices kind of gradually come down a little bit, or at least it's not as inflationary an input that it could have been into the market, that would tend to ease the pressure on yields.
Yeah, I agree. And speaking of, let's use this as our opportunity to discuss oil, because oil has really done a significant move, of course. And I love talking about this chart, mainly because, Brent, the chart has played out in a way that gives me some confidence, because it's played out the way that I thought it might, and it's always fun when you think something's going to play out a certain way and then it follows suit. It's an illustration of how the technicals can help us out if we just follow some very standard approaches. So, Brent, here's the look. Now, yes, we find the 200-day with our move today, but if you've been watching this class for the better part of the last month or so, maybe 3 weeks, we talked about the significance of taking out that uptrend line here and using it as support originally, then becoming resistance. And look at how it acted as resistance here at the confluence of the 20-day moving average. We broke down, rallied back into it, failed, and rolled over. That's more or less exactly what a technician may have expected.
Textbook, Kevin. Textbook. You have, you can see the trend lines. You can see the moving average, horizontal support. We actually had a 2050 crossover right at that point. We had lower highs, which the expectation after a series of lower highs is more lower highs probably. And that's what happened. And, it doesn't always work out so neatly, but when it does, it's nice to see that.
You're right about that. To say that it works like this every time would be a lie. We know better than that. But it is nice to see. Now, from the standpoint of the trend, Brent, this is kind of an interesting spot because, of course, we found the 200-day with today's low. Yeah. But one of the other developments that's happened by bringing oil down this level, we're trading at $76.40 a barrel now, Brent. Talk to us a little bit about the expectation for oil as we go forward here, looking at the futures. And we should also mention, of course, I need to get some disclosure noted here. We are using the futures to look at oil, but we're not advocating for futures trading. Remember, this carries a higher level of risk and is absolutely not appropriate for all traders. What we're trying to do is gain an understanding of the potential expectations of oil's move and how it relates to the broader markets. But Brent, talk to us about what we're seeing here and how it's different than maybe what we've been seeing over the better part of the last couple months.
Yeah, I mean, oil has come down, and there was a bigger discrepancy. There was a big discrepancy between the current price and futures prices. You can see the expiration dates there in kind of the third column over on there. And you can see For each of those dates, there's a different price. And, in kind of in normal conditions, the further out you look, this is in normal conditions, what we call kind of a contango condition. It's the price in the future is going to be higher than the current price. Well, we had this situation where oil was elevated because of the conflict in the Gulf, and there was a huge backwardation. And what that means is there was a huge difference. The current price was much higher than the future dated price. Well, look at that is now compressed. Current price, $76, and going out all the way to November, we're right around $74. So before we could kind of look at it and go, well, hey, the market is expecting a significant drop in oil. Well, that's one of the reasons when we were talking earlier, we said, hey, the market is expecting some sort of resolution to the conflict in terms of oil prices, because we could see that the future prices, those November contracts, October contracts, were showing a much lower price than what the current price was. Well, it's still lower. It's still expecting, the market's still kind of expecting, the oil market's still kind of expecting some drop in prices, but not nearly what it was before. We've gone a long way down, long way towards where the future expectation of price is.
Yeah, and I think that's the big takeaway here. Now, with all of this said, Brent, from a technical standpoint, being that we found the 200-day, the risk now is to think that oil has to go lower. And I think this is important to maybe temper that extreme bearishness relative to oil, because as we saw here, when we broke down, we needed to rally into resistance. And I think it might be pertinent for traders to be thoughtful here and think, hey, we may have an opportunity to see oil now rally possibly into resistance for confirmation purposes once more to see if this downtrend will stick. And that could mean a 10 to 12, maybe 15% pop into resistance before things shift any further here. So I do think it's important, and maybe for traders, to at least be thoughtful and aware of the move we've gotten and how it's benefited the broad market, but not to think that it's only lower from here.
Yeah, probably. I mean, a lot of oil prices were driven just by the news out of the Gulf. Well, that can change, and it may be a little bit more of a technical, less likely to just be driven by a news event here on this. And unless there's more news that comes out, who knows? Maybe the peace deal falls apart or whatever. It's probably, I think a lot of people expect there to be some bumps in the road here as we go forward here. I'm no geopolitical expert or anything like that, but things often don't go quite as smoothly as hoped. And so that could certainly affect oil prices. But given the move down we have, given the 200-day moving average, certainly would not be surprising if we see a bounce up here at this point. Look, anytime we're looking at any commodity or stock that has made a big, quick, significant move, very often you see that retracement, kind of a quick retracement up. Not all the way back up to where it was necessarily, but part way back up. That's kind of the flag situation. In other words, this could turn into kind of a bear flag, with this being the flag pole, and then a retracement up.
Yeah, that's a good reminder as well, of course. Think about it from both sides of things, right? Both potential moves, and then you won't be surprised one way or the other, right? Okay, quick hit here, Brent, on the semis. As you said, semis had one of those ugly candles there yesterday. You could see we had not an engulfer, because we did make the high the day before. Yesterday did not make a high, but it did go pretty aggressively to the downside once we traded through the low from Monday. So we traded below the low of our high day, and then selling accelerated down toward the close. And so if nothing else, we've held the 20-day, And look, the 20 has been quite consistent, even in the midst of the more extreme volatility there that we got as things kind of escalated in the Middle East conflict, and then immediately right back to new highs. So, again, the trend here remains super strong in the semis. A series of closes below the 20-day still stand out as being the significant need for any deeper pullback here, I would think.
I would consider today to be actually a fairly strong, good signal here that the sell-off didn't continue, and we kind of have this, I don't know, Harami type candle, I guess, today.
Sure.
I don't know where we're going to close today, but clearly the sell-off, the momentum of the sell-off maybe is tempered itself there, and we're actually getting a little buying here today on this. So the general trend continuing strong, and so today's a strong day.
Yeah, not terrible by any means. I mean, yesterday's candle ugly, but the fact that it didn't gap lower into the 20-day and held up pretty well, in fact, gapped higher, is a positive here. The other one now the interesting thing, transports are down a little here today, and I'm wondering if maybe this is just a reaction to having found that 200-day moving average, maybe a little bit of profit taking. The trend of the transports has been quite good for the most part. The airplanes have done very well. Airline stocks have been really enjoying the shift that we've seen out of oil. And you'll notice here, Brent, we had on the airline space, we had a bull flag breakout to the upside, and now we've got a gap ledge that's been established at prior highs. This is a real interesting development for airline stocks.
Yeah, in theory, that should be a fairly strong support level. And so some bullish traders may consider that and go, well, hey, when I get the bounce, some traders could jump in now. Some traders would say, hey, if I get a stronger bounce than what we're showing today, then that could be a bullish entry for some bullish traders. Mm-hmm. Of course, it could easily break down. That would be kind of a key support level. The lows we've hit the last few days here, which coincide more or less with the highs we've seen over the past few months, breaking below that would be certainly a bearish signal here. But right now, we'd still consider that to be a support level.
We sure would. And I always like to make sure we hit on the rest of this space so we can quickly peek in on the truckers, which are pulling back a little bit after having run nicely. I mean, again, a space that ties clearly toward oil and gasoline prices here. Breaking the 20-day is kind of notable here, so maybe eyeballing truckers a little bit might make some sense here. You might see a deeper pullback into this 50-day moving average, but today's candle will kind of be determining that, I would think, Brent. You agree with that?
Yeah, and so, I mean, maybe, I don't know if I'm maybe a little surprised that we've had this reaction, truckers being down for the last 4 days.
Yeah.
Given how the news has affected oil, and you would think lower oil would tend to help truckers. Mm-hmm. But maybe buy the rumor, sell the news type situation on that. But we'll see where we pick up some support here on that.
How about a 29% move in less than a month, Brent, to the upside in advance of oil's crater? Yes. So it's almost like the oil move out of the triangle that we drew in led to truckers going straight up 30% nearly, and then you see oil find support today actually, and ultimately the truckers should just take a little bit of profit taking. I think that's one way that traders would look at this now. And then the rail stocks holding up pretty good. Notice here, if I threw this up with the 50-day exclusively, we're at the midpoint of this channel we've been watching on the rail stocks. And Brent, this is a nice reminder again of economic health, isn't it? Because it means that we are moving stuff cross country.
Yes, that's why very often we'll look at rail stocks or truckers or whatever, or FedEx or something like that as kind of a barometer of economic health. Is when the economy's humming, people are shipping stuff and moving stuff, and that's what we're seeing. And so you can see the optimism that we've kind of maintained despite all the kind of bad news we've had. Hey, we've been fairly positive, and that midline. I'm glad you drew that channel, that kind of mid-channel there, because that though very often that will act as a support level or a resistance level if we're on the other side of it. And right now, we'd consider that to be a support level. So even if we dip a little bit below that 50-day, I think that's still we still have the potential for a bounce there on that.
Yeah, I think that's a good reminder, Brent, right? A takeout of the 50-day wouldn't feel good for trend traders, and yet you've got that uptrend line still holding, still working, and this action for basically the last 2 months now almost has been bullish, and maintaining a level like this is likely to be seen as bullishness, even though it's more or less gone sideways after having achieved that level. Now, Brent, one of the interesting areas we talked earlier about yields, right? Yields coming down. That's not a negative. That's a positive. It's one of the main reasons I think that we've seen the continuation of our trend. U.S. dollar lower, yields lower, oil lower, all of which is disinflationary. Interestingly enough, Brent, the home builders have seem to have made a significant move here. So check this out. Home builders, I'm going to put up, whoops, let me get back to my full-size chart. Here we go, everybody. So we've got the 2-year chart here. I'm going to put up all the major moving averages. So we're at, let's go with just the 200-day. We are at the 200-day now, Brent. Previous support, now resistance. This stands out, right? Because we've come to it here, and so we've got now a second test. It's important for home builders to move through it. But Brent, one of the other things I'm noting is a divergence down here. And you know, the maybe the story, the narrative, the setup here for home builders is possibly improving.
Yeah, well, I mean, one thing that's certainly would help would be interest rates, right, and mortgage rates specifically, if they come down, and so that would, so you know, maybe we're kind of at this crux point, this you know, this key point here of, do we trend down? Do we have this kind of lower high from where we were? I don't know how long ago that was. That was a couple months ago.
Yeah.
And if are we going to continue with lower highs down there? And if that's the case, that's obviously not good for them. But if we break above this level, that would be a very positive sign. This is kind of a key technical level for home builders. And yeah, you have that divergence. And as we've talked about in the past, divergences don't always come to fruition in terms of meaning price action is going to go up. If in this case, it's a bullish divergence. But when you combine the two together, that's what we do with technical analysis, by the way, is we look for a convergence of different things. Maybe support levels or resistance levels in different areas. You look for other indicators like an RSI or a stochastic or MACD or whatever. When they kind of come in accordance to one another, that's when a lot of traders will act on things or view it as meaningful.
Yeah, you're right, Brent. This takes us back to our disclosures, right? I always say that technical analysis is one of those decision-making puzzle pieces, not the entirety of it. And when you apply a few different concepts to a chart, well, then you might be adding or stacking up pros or stacking up cons. And if you're stacking up pros, it can give you greater confidence. One of the other things that stands out here, in addition to the bullish divergence with that lower low in price, higher low in the RSI, is, Brent, price is not yet to the high we made back here, but the RSI already is to that level. So yes, price yet again, not as high as it was the last time the RSI was up here. So we have another way of looking at a bullish divergence based on the recent price action.
Yeah. So, you know, hopefully for home builders, I guess that's that comes to fruition here on this. But right now, there's, I think, some hope. But with the jury still out on this, we'll just have to see. Obviously, today's good, but we do have some that 200-day can certainly act as a resistance level on us.
It sure could, yeah. And no matter what we say in the way of divergences, the reminder is price matters most, and that's what we'll be needing to pay most close attention to, obviously. Now, Brent, as we get to the final 10 minutes here, I obviously want to get to some of those stocks that I mentioned off the jump with some price target adjustments here in the tech space. But, Brent, anything in this sector action that you found interesting, pertinent, maybe trend shifting, anything you want to make sure we address before we move to those individual stocks?
Well, just, I guess in terms of sectors, financials have been strong lately. Industrials have been strong lately. Healthcare has been strong lately. Ooh. And so those have been kind of driving the market there on that here. So, for example, you have financials up there.
Yes, I do.
And so, that's quite a turnaround that we've had. And I guess one thing is you could say, well, is it a kind of overextended? And that's always a question we have. And it wouldn't be surprising to see a little bit of a breather, I guess, a little bit of a consolidation here when we've extended that far above our moving averages. And that's not a bearish thing. When a stock or index or sector goes up as quickly as it does, as it did, and you could see that reflected in the RSI, very often you'll have a few days of a little pullback or sideways move, but don't interpret that as a bearish move or a change in trend necessarily. That's just a little bit of what we call a consolidation typically.
I'm so impressed by the look of this pattern. I mean, just the break of the downtrend, the casual nature of the support hold thereafter that basically allowed the 50-day to provide support. And now you've got all three of the major moving averages converging on each other, validating the breakout essentially and giving us new support. So any throwback move might come to the breakout zone, might come back to the 200-day from a profit-taking standpoint. We shouldn't be distressed by that because the reminder on a throwback, Brent, is the throwback confirms support if it holds, and that can give us a validated level to manage risk against thereafter. So that could be a positive development. You also mentioned the industrials, and you can see here we've talked about something similar, Brent. 50-day moving average holding up, horizontal support tested, and boom, we're at new highs.
Yeah, we had that nice big gap a few days ago there as well on industrials. And so if you look at the candle like a couple days ago, the low of that candle is a new potential support level there. Yep. So if we pull back, look for that, and that corresponds more or less to the high that we had there. And so if we do pull back, that would be kind of the first level I would consider in terms of a support level on that.
And just as a reminder, one of the ways that some traders are going to look at this was a 1425 approximately to 50, or let's call it 1430 up to 1505. That's a 75-point range. So if you added that 75 to the 1505, you get a 1580 potential target, that some traders might be looking at. So even though we're at 1532, they might be thinking, hey, we've got another 50 points of upside, which could be another 3% plus. So that seems notable as well. But also, as the reminder, when we go fishing for opportunities, one of the thought processes from that top-down methodology is leaning into your leading sectors and then looking for the leaders within that sector, Brent. And that's a common approach that traders like to take, trend traders in particular like to take.
Absolutely. So, there's a lot of different ways to find opportunities in the market. This is one reason why we look at sectors and sector strength and the rotation of sectors, because money, even when certain sectors are doing poorly, usually others are doing fairly well. Money goes somewhere, even if it's pulling out of some sectors, it's going into others or into other asset classes.
You're right. It does go somewhere, and if we can decipher where it's going, it can be quite
Yep.
instructive for us. Brent, the last thing we're going to do is put up a chart of the tech space just for a quick peek at the trend here, because a lot of the price target upgrades and price target changes, pardon me, that we're going to talk about here in the final 5 minutes are in the tech space. You can see this holding the 20-day moving average at this point. But I wanted to bring to the table a few of these changes that have made their way to the notes today. So Intel at Bernstein was not upgraded, but had a price target adjustment here. And the stock has been doing quite well, Brent. Check this out. I thought I had my return details in here. I do not. Just from March, if we looked at where we were the bottom of March to where we are today, 190%. Bernstein raised the target to $100 a share from $65 a share. They keep a market perform rating on the shares.
Okay. So interesting to note. So they raised their price, but their price target is still below where the current price is. So, you could, they say market perform, I guess. It strikes me as a little bit bearish in their minds, at least, in the sense that they think that the appropriate price for this is $100.
Yeah, but it's tough to argue with a stock that's moved as quickly as it has.
Yeah.
And you know what? Volume has been substantial in this move higher. So that's notable to a lot of traders, because the move wasn't on smoke and mirrors. The move was on news. And when you get volume supporting a move to the upside this significantly, we're, like I said, 190% over 10 weeks. Traders are taking note. Micron had a price target adjustment at Citi today. Similar action here, Brent. This thing has just been, what are you going to say? The stock's been above the 20 days since late March. It's been an absolute beast. Citi raised their target on Micron to 1,200, up from 840. They maintained the buy rating on the shares ahead of the May of the quarterly report that's coming in June for the end of May. And they also upped the company's fiscal 26 and 27 estimates to reflect better than expected memory prices in 2026. So significant shift there, Brent, up from 840 to 1,200.
And it's just reflecting what's happening in the economy. Obviously, there's a huge demand for chips, and all expectations, it seems like, are that there's going to continue to be a huge demand for chips. And it's not just one thing. We've seen a shift in the chip sector is, for a little while, the discussion was all about NVIDIA. Yeah. And that has now diversified a little bit. And it seems like there's room for more than one company in the room, so to speak, I guess, in terms of the future of chips. And it's not all just NVIDIA. And that's why we've seen some of these other stocks, Intel, Micron, we just looked at, outperforming NVIDIA of late, too.
Mm-hmm.
So that's what we've seen, and this is a nice bullish chart for that reason.
Boy, it's really hard to say it's anything other than that, Brent. You want to put the numbers to it? I'm just going to go back to this low on March 31. Okay, so to the peak, 253%. To the last trade, 230%. Not too bad. Okay, incredible moves. AMD had an adjustment at Bernstein as well. That's up to 600 from previous 525. They maintain an outperform rating. ARM also with an updated number from Bernstein, raised to 500 from 300, maintaining an outperform rating. Brent, this looks interesting. This is possibly setting up as a handle on the right-hand side here. And if not, regardless of whether you call it a cup and handle setup or what have you, any move that makes it, takes out new highs and moves to maybe through 430 is going to be seen as bullish, of course. So anything else you'd like to note on this one in particular?
Not this one in particular. Just these charts are all looking pretty similar, to be honest. ARM, AMD, Micron, you could substitute one for the other, it seems like, in terms of the bullishness that we've seen on these.
Yeah, you really can. This in particular, we always talk, Brent, about traders liking and having comfort stepping in after diagonal downtrends break. If you call this a down channel for 2 weeks, you call it maybe a bull flag, whatever you call it, we a hold, right? I mean, heck, we made a low here on the 10th. The next day, the 11th, we closed above the high of that day, so that gave us a hold opportunity, and then you broke the downtrend. If you bought on the hold, you bought on the downtrend break, you bought on the confirmation or the follow-through day, you'd be maybe at break even, but this is setting up and still looks bullish, even though we've met our resistance here at about 430 over the last couple of weeks. One more that got an adjustment was Broadcom, AVGO. Let me get that into the symbols there. There we go. AVGO, JP Morgan stated they believe that the market is underestimating Broadcom and their significant dominance in advanced packaging design, cadence of their new designs, and intellectual property portfolio. So they went ahead and changed the target to 580 and reiterated an overweight rating on Broadcom and would be their quote, aggressive buyers at current levels, end quote. So I thought that was a very important note from JP Morgan.
Yeah, very often we see upgrade or downgrade or note or something, and it doesn't really affect the stock. Hey, we're up 4.4% right now on Broadcom. Seems like that's spurring some bullish sentiment on the company.
Yeah, market taking notice is how I might put that as well. Yeah. Brent, as always, man, great discussion today with you here on a Wednesday. Always enjoy getting you on Wednesday. Thanks for being here. Thanks for sharing your thoughts and insights with all the viewers today.
Love being here. Fed day, everybody, and just glad you're here.
Yes, we are. We always appreciate you joining. Make sure you're following us on X, Barb Armstrong CS, Brent Moores CS, and Kevin Horner CS. And if you like this discussion, make sure you hit that thumbs up button for us so that we get a little aid there in the YouTube algorithms. And make sure you subscribe to the channel, obviously. So with that, have a great rest of your Wednesday, everybody. We look forward to catching up with you again real soon.